Imagine waking up one day and realizing that a simple decision you made months ago, one click, one investment, completely changed your financial future. That's not a fantasy. That's exactly what's happening to smart investors who saw the signs early and acted before the crowd. Right now, we're standing at the edge of another one of those moments. The market is shifting, trends are colliding, and behind the headlines, a handful of stocks are positioning themselves to potentially explode in value. But here's the kicker: most people won't even notice until it's too late. That's why you're here, because you don't want to chase after gains. You want to get ahead of them. And in the next few minutes, you'll hear exactly which stocks could be the breakout winners this year, and more importantly, why. Not hype, not guesswork. This is backed by trends, fundamentals, and timing that's aligning in a way we don't see often. Now, we all know the market's been chaotic lately. Inflation jitters, interest rate speculation, consumer spending fluctuations, it's a lot. But within all that noise, there's a powerful undercurrent forming. Certain sectors are bouncing back harder than expected, others are quietly accelerating under the radar, and some individual companies are making massive plays that Wall Street hasn't fully priced in yet. And if you're paying attention, this could be a golden setup. Well, you want to invest where there's momentum, but also where there's resilience. One of the biggest mistakes beginners make is chasing what's already pumped. That's not the move here. We're talking about companies that are strong, stable, and still undervalued relative to their potential. And what's fascinating is many of these names aren't the ones flooding the headlines every day. They're flying under just enough of the radar that most retail investors haven't caught on yet. But smart money is circling. Let's start with one that just dropped a bombshell of a quarterly report, yet it didn't get nearly the hype it deserved. This company crushed earnings expectations, posted double-digit revenue growth, and signaled a powerful comeback in consumer discretionary spending. I'm talking about Lululemon. Yes, the same Lululemon that many investors assumed peaked during the pandemic era athleisure boom. But here's what everyone's missing: this isn't just a clothing company anymore. It's evolving into a global lifestyle brand with a cult like following and one of the most loyal customer bases in the retail space. In the latest earnings report, Lululemon didn't just beat earnings, they showed us they're executing a long term strategy almost flawlessly. International growth is accelerating rapidly, with sales outside of North America up over 30%. That's massive. It tells us Lululemon isn't just a North American trend, it's becoming a worldwide brand, which dramatically expands its addressable market. And don't overlook their margins. Even in a tough retail environment, Lululemon managed to expand gross margins. That's the mark of a premium brand with pricing power, something very few companies can pull off in this economic climate. When other companies are discounting and slashing prices to keep inventory moving, Lululemon is holding firm, and consumers are still buying. And that speaks volumes about brand strength. And we haven't even touched on their growing men's line, new categories like footwear and innovative store experiences. They're not standing still, they're building. That's what you want to see in a long-term winner. Now, zooming out a bit, why is retail such an important sector to watch right now? Because consumer sentiment is shifting again. Despite inflation fears, we're seeing signs of strength in higher income spending. The middle to upper middle class consumer isn't pulling back as much as analysts predicted, and companies like Lululemon are perfectly positioned to benefit from that. They're not fighting over bargain shoppers. They've carved out a niche that people are proud to be part of, and that loyalty translates to consistent revenue, even when the economy throws curveballs. That's the kind of defensive growth stock that deserves a spot on your radar. But let's not stop there. Another stock on the radar right now is quietly riding one of the most powerful mega trends of this decade: semiconductors and AI infrastructure. No, I'm not talking about the obvious giants that everyone's already bought into. This is a company that's providing the backbone, the essential components that make AI chips even possible. While everyone's chasing the front runners, this stock is delivering steady, underappreciated performance and is gearing up for a breakout as demand for AI servers and data center expansion explodes. Think about it this way. AI isn't a hype cycle anymore. It's infrastructure, and every major company that wants to stay competitive is pouring billions into upgrading their tech stacks to handle machine learning, generative AI, and real-time analytics. That means server farms, memory components, cooling tech, and compute systems. All of that needs hardware. And there's a small group of suppliers that are uniquely positioned to benefit, even if they're not in the headlines. We're also watching a few energy plays that are gaining momentum, not just because oil prices are unpredictable, but because clean tech and infrastructure spending are setting up a long-term runway for companies focused on smart grid technology, lithium supply chains, and next-generation batteries. One name in particular is flying under the radar, but holds patents on a new battery design that could completely shift how EVs perform over the next 5 years. And with regulatory tailwinds from the Inflation Reduction Act and global mandates pushing toward renewables, these companies aren't just speculative. They're getting serious institutional attention. And here's something a lot of retail investors aren't paying attention to. Financials. With interest rates likely to stabilize soon and the possibility of rate cuts entering the picture next year, certain regional banks and fintech firms are setting up for a comeback. Not the over-leveraged ones that spooked the market last year, but niche players with strong balance sheets, growing user bases, and innovative product offerings. These are stocks that were beaten down unfairly and are now trading well below intrinsic value. The smart money knows recovery stories can be some of the most explosive trades if you get in before sentiment turns. What's key in all of this is timing. You don't want to be the last person to the party. You want to be the one who saw the opportunity before it became a trend. That's how real wealth is built in the stock market. By identifying quality companies, understanding the macro forces at play, and acting when others are still skeptical. That's where the biggest gains happen. Not from hype, from conviction. And conviction is exactly what Lululemon is delivering right now. The market tried to doubt them, tried to say they were just a pandemic trend. But they proved otherwise, and that kind of comeback story, backed by fundamentals, strategic growth, and brand loyalty, is something you don't want to ignore. This is a stock that's telling a bigger story than just yoga pants. It's telling a story of global expansion, operational excellence, and long-term shareholder value. So as you look at your watch list, ask yourself, are you positioned for the next wave of growth, or are you still holding on to names that already ran? Because the stocks we just talked about, they're not just tickers. They're real businesses making real moves. And the market is giving us a rare window where the upside is still ahead of us. Don't miss it. Don't wait for the headlines to tell you it's time to buy. By then, it's already too late. This is where the smart money starts moving. This is where trends begin. This is where you make your play. This is not financial advice. Now's your chance to step ahead of the curve. Keep researching, keep watching, and most importantly, be ready to act.